This TFMR podcast is brought to you by your friends at JM Bullion. Visit jmbullion.com for all your gold and silver bullion needs. Hello again from TF Metals Report, and welcome to your weekly podcast highlights. This is a free service we post to your favorite audio platform. We post it to YouTube. Something that at least keeps you up to date on what the metals are doing and what we're talking about at TFMR. Of course, a podcast every day is just one of the benefits you get at being a member at TFMR. It's only 50 cents a day. At a time like this, you really should consider joining. So again, a podcast every day, a summary of what has happened, a look ahead to the next day is all part of what you get. And these are just some very small snippets. Usually the podcasts run about 20 minutes or so, and some of these are maybe 20 seconds, but at least gives you a feel for what we're discussing. If you listen to these podcasts every week, these summaries, last week we were talking about Newmont and how in the last two times Newmont has been smashed, once it began to rally, it led to a pretty significant rally, or coincided at least, with a significant rally in gold. Well, on Monday, we continued that thought at TFMR, and we looked at the chart of Newmont, which had actually had a pretty good day. And here is some we discussed on Monday, January, and then a big rally, as gold turned higher. In November, kind of turned, but then a jump, right? And then off we go. Well, look at that candle today. Very close to an engulfing and a reversal candle. Opened lower and then rallied all day long despite gold being under pressure, silver being down 2.5%. Now, it may just only be going up here to close this gap up to 36. We'll see. But above 36, and if Newmont's moving higher, what does that tell you gold's doing? Okay, so let's look at gold. On this chart from the podcast of Tuesday the 23rd, you can see a clear trend line, obvious trend line, that dates back to the controlled and contrived manipulation event of December 3rd and December 4th, when sentiment was crushed through active intervention and active management by the bullion banks. They don't do it every day. They don't even do it every week or every month. But man, when they get put into a corner and they're faced with a breakout for which they are unprepared, they're going to act. And that's what happened on the 3rd and the 4th of December. Anyway, there's a trend line here now that we hope will eventually be beat. Well, it will, of course, eventually be beaten. We hope it happens next week. So that was all part of what we discussed on Tuesday the 23rd. Look at its downtrend line. Okay, go all the way back to the shenanigans of December 3rd and 4th. Look at how many points that connects. What, 4? Almost 5? So that's a downtrend line. Look at this is now 4 or 5 days in a row. It's been under the 50-day. Look at the last 3 days. Trying to get above the 50-day. 20.32.40. It got over there today when it got 20.39, but right now it's 20.30. Just can't do it. And when I'm talking about running out the clock, again, we know this is where the sweet spot is, so maybe gold just continues to go sideways between the 200-day and the 50-day, eventually pressing up against this downtrend line by when? Middle of next week. Oh, what happens in the middle of next week? Of course, if you're interested in the daily price swings of COMEX gold and COMEX silver, you got to follow the dollar index, especially during New York hours where the algos are in control. A rising dollar index puts pressure on the metals. Falling dollar index seems to help. Now, right now, as the year begins, the first 4 weeks of the year, price has been driven, especially gold, has been driven by rate cut expectations, not so much the dollar. That'll change one day, may change next week, but for now, dollar index is kind of secondary. But we'll keep an eye on it. It's been following a trend line up from the lows of late December, so at some point that trend line is going to be broken, again, maybe next week. But here's how it looked on Wednesday, the 24th. And finally, just update the daily charts. Look at this dollar chart. Again, failing to stay above that 103.50 level, which is clearly resistance. Fell below the trend line today briefly, and then the PMIs rescued it. Still looks like it probably wants to keep riding this higher to 104 by the time we get to the FOMC next week. But we'll watch it tomorrow. A poor GDP, a 1.8 or 1.7, and the dollar might break down below 103. Anyway, it's going to roll over eventually. We just can't say it yet because it's still above that trend line. Speaking of trend lines, on Thursday, it was back to looking at that exact same trend line in gold that we discussed on Tuesday. Again, all trend lines are eventually broken. Nothing's going to infinity and nothing's going to zero, except it's some penny mining stock that I own. Regardless, this trend line will be broken. Maybe sometimes just by running out the clock and going sideways. Maybe that's what gold's doing. And that's all part of what we discussed on Thursday the 25th. Gold on the daily chart, like I said, just kind of going sideways. Trapped between the red line, which is the 50-day, the green line, which is the 200-day, and trying to run out the clock. Okay, see this? I mean, that trend line's coming down. We just go sideways, we're going to be to that trend line by Tuesday or Wednesday and then try to bust through it with the FOMC and then extend with the BLSBS. But we're trying to run out the clock. Prices were mostly unchanged on Friday, January 26th. We wrap up the week. Pretty good week in silver. Okay in gold. And now we focus on next week, the FOMC meeting for January, which will conclude on Wednesday, and of course the next jobs report on Friday. Ahead of that, the coast has been cleared. We've been watching this for 4 weeks. We've been watching it every day this week at TFMR. Rising open interest in COMEX silver with a falling price is always indicative of the large spec hedge funds getting short. And late Friday, we got the latest confirmation of that with the Commitment of Traders report. As you can see on this report, you look deeper into it in the disaggregated report. Notice these swap dealers, those are banks. Notice the bank trading desks have now reduced their net short position to almost nothing. Just 4 weeks ago, as the year began and silver was $2 higher, they were net short 16,000 contracts. All of those contracts have now been covered, and the banks are basically net neutral. But look at the hedge funds, the large speculator hedge funds. Just 4 weeks ago, they were net long over 25,000 contracts. They are now net short. That's a sign we're at the bottom. They are ready for another short squeeze. That short squeeze probably begins next week with the FOMC. We get that news behind us. Everybody starts to look at March. We get a lousy jobs report on Friday. And I think February will probably make back most of what we lost in January. Get that $50 back in gold, get most of that $2 back in silver. So we'll watch for that. It's going to be a busy week next. So we hope you enjoy your weekend and come back again next week for another edition of the TF Metals Report podcast highlights.